Imagine putting all your eggs in one basket. That's essentially what happens when you never diversify your investments. Many people stick to what they know, whether it's a single stock, one industry, or even just cash. But what are the real consequences of this approach? In this video, we'll explore the risks and realities of never diversifying and why spreading your investments matters more than you might think. Let's start by understanding what diversification actually means and why it's a cornerstone of smart investing. Diversification is a strategy that involves spreading your investments across different assets, industries, or geographic regions. The main goal is to reduce risk. If one investment performs poorly, others may do well and balance out the losses. Think of it as not relying on just one source for your financial future. By diversifying, you're building a safety net that can help protect your wealth from unexpected downturns in any single area. But what happens if you ignore this advice and keep all your money in one place? You never diversify, you expose yourself to what's called concentration risk. This means your financial future is tied to the fate of just one investment or sector. If that single investment suffers a setback, say a company scandal or an industry downturn, your entire portfolio could take a major hit. History is full of examples where once promising companies collapsed, leaving investors with huge losses. Concentration risk is like walking a tightrope without a safety net. Markets are unpredictable. Economic downturns, political events, or even natural disasters can cause sudden swings in asset prices. If you're not diversified, these shocks can have an outsized impact on your portfolio. For example, if all your investments are in tech stocks and the tech sector crashes, your savings could plummet overnight. Diversification helps cushion these blows by ensuring that not all your assets react the same way to market events. Another downside of never diversifying is missing out on growth opportunities. Different assets and sectors perform well at different times. By sticking to just one, you might miss the chance to benefit from rising markets elsewhere. For instance, while one industry struggles, another might be booming. Diversification allows you to capture gains from multiple sources, increasing your chances of long-term success. Investing without diversification can also take a toll on your emotions. When your entire portfolio depends on a single investment, every price swing feels dramatic. This can lead to stress, anxiety, and even panic selling during downturns. Diversification helps smooth out the ride, making it easier to stay calm and stick to your investment plan, even when markets get rough. Let's look at a real-life scenario. Imagine an investor who put all their money into a single energy company. For years, things went well until new regulations and falling oil prices hit the industry hard. The company's stock price crashed and the investor lost most of their savings. If they had diversified into other sectors or asset types, the losses could have been much less severe. This story highlights the importance of not putting all your eggs in one basket. Over time, the effects of never diversifying can compound. Not only do you risk large losses, but you also limit your potential for steady growth. A well-diversified portfolio can help you weather storms and take advantage of new opportunities as they arise. Without diversification, your financial future is much more uncertain and vulnerable to unexpected events. Summary: never diversifying your investments can expose you to significant risks, emotional stress, and missed opportunities. Diversification is not just a buzzword, it's a proven strategy for managing risk and building long-term wealth. By spreading your investments, you create a more resilient portfolio that can adapt to changing markets. Remember, it's not about avoiding risk entirely, but about managing it wisely. Make diversification a key part of your investment journey.